Is going on out there? I hope everyone is doing absolutely fantastic and you're doing good out there. Part of this channel is to give you practical advice you can use to be successful in this space. No matter if you're brand new or an OG, today we're going to be discussing market psychology and how to not lose your crypto or your sanity. Raise your hand if you've ever panic sold at the exact bottom and then watched that coin 5 to 10 times in the next 2 months. Yeah, I'm raising my hand. Multiple life sentences happen in this environment if you don't understand the psychology and the emotions that go behind it. It's a freaking gut punch that is felt. And that's not from the chart. It was my emotions robbing me absolutely blind. And probably, I know you've probably experienced that as well, if you're honest with yourself. Now, today, we're going to expose the number one reason I used to lose money in this crypto space. And it was not scams or rug pulls. It was my own brain. Although there are rug pulls out there, without a doubt. Now, there are exactly two emotions running this entire market. They're called fear and greed. That's it. Right now, we're at 15, which is extreme fear. Here's the thing I wish someone would have tattooed on my head years ago. When this index drops below 20, extreme fear, Bitcoin has been green 30 days later, 78% of the time. And as we know it, BTC generally correlates to how the market reacts. So that means if Bitcoin's going up, all the rest of the market's going up as well currently. Now, that correlation may change in the coming years, but for right now, we're basing it off of those facts. That's 78% of the time, ladies and gentlemen. Now, when the fear and greed index is above 80, which is extreme greed, we get a 10% correction 72% of the time. That's not coincidence. That's really millions of us doing the same exact stupid thing at the exact same moment. Panicking, buying, selling, due off of emotions. Understanding what is behind it can absolutely help save you a ton of money. So why do emotions cause reaction? Behavioral science has the answers for us. We don't have to go out there and figure it out. And they're absolutely brutal, to be quite honest, when you listen to this and you take this in and you understand it. Number one, the disposition effect. I sell my winners way too early and I hold losers forever, praying that they're going to come back. I have done that exact thing because of this, thinking that something that I knew in my gut, that project was not going to go anywhere. And instead of selling, I held on to that bag because I've programmed myself to think that other than the market, the market was going to think differently and be graceful and it was going to go back up. We've got to get out of that mentality. We've got to do our research. We've got to understand the project and we've got to understand the reality sometimes. Number two, loss aversion. This one, losing $1 hurts twice as much as gaining and making profits, as gaining $1 would feel good. So I'd rather gamble on a 90% coin than lock a win in and move on. You've got to lock the wins in. If you're seeing profits, which we're going to talk about in a minute, and you've written it down and you're profitable, take a profit, take the win, be happy. It's okay. Taking profits is absolutely a marvelous thing if you have a purpose for what you're going to use those profits for, as we talk about in other videos. But number three, hurting and FOMO. 58% of all of my buys in the past, before I figured this out, and I guarantee probably yours as well, if you're honest with yourself, happened in the top of the 10% of the move of the market. And I did that before I changed my mindset and I started to understand my emotions and that FOMO. We pile in at the peak because numbers going up and we don't want to miss that ride and that thrill of that number going up. Or some influencer or some ex-post has told us, this is it. If you don't get in now, you're going to miss it. Emotions. Do not FOMO. Number four, over trading. Traders generally lose money and underperform, and buy and hold do better off 18 to 22% of the time and make 18 to 22% more than traders do. So come on, enough pain already. Get this. Let's get our crap together so we can all succeed and take advantage of this wonderful space and this opportunity that we've been provided. Now, here's exactly 4 things for you to do, for you to implement today to turn your portfolio around and turn your gains and your profits around. Number 1, Fear and Greed Index is now my dashboard and what I look at as a gauge of what is going on. I'm going to refuse to buy when it's above 75, and I'm not selling if it's below 25, unless, with this caveat, unless my plan says otherwise, and I've written that plan down and I have my exit strategy and I'm following orders, the orders that I have documented. 2, trading journal, absolutely non-negotiable in my opinion. Before every trade, I have to write, and I sit down and I go, how am I feeling right now? Do I feel good about this trade? And here's why this trade makes sense right now. Number 1, I should have had it written down. But if I don't, I'm going to sit down and rationalize, why am I trading? If I can't fill out that sentence and complete that sentence calmly without emotion, I'm not trading. I'm walking away from the table and I'm leaving my chips where they are. 3, everything automated. It makes so much more sense. And what do I mean by that? Weekly DCA in to, as an example, XRP or your favorite project. And when you set that automation in effect, I'm going to buy every Monday at 10 a.m. It's automatically set. And this is assuming if you have dry powder. Again, don't use leverage. Don't do dumb things. Don't mortgage the house. And again, none of this is financial advice, but automation puts you on a clear path to success. And it just makes your life a lot easier and non-emotional. Number 4, tiered profit taking. We talk about this all the time. Take 10% off, 20% off when you've gotten 2 times, 5 times your money and things are up in the market, and let the rest ride. And that's fine. Whatever your plan is, greed is removed from the equation when you do that, and it's documented. Finally, what is the result going to be with all this? Investors are going to, again, that have non-emotions and they stick to the rules, perform 20 to 30% better. And that's a fact. Look at the data yourself. And that's free alpha there for you. Now, quick recap. Emotions are absolutely the biggest tax that you're going to pay in this environment in crypto and really in any trading environment. Fear makes you sell low. Greed makes you buy high. Data says you will leave tens of thousands on the table every cycle because of it. But now I know, and now you know. So if you've ever made, a bad decision, or you've been absolutely wrecked by FOMO or panic, smash the like button, because we're all in this together and we're trying to figure out this environment. Go out, drop your worst emotional trade story out in the comments. I read all of the comments, and the worst one, I'll pin it up in this video. But again, with that, just be safe, be smart, and most of all, be non-emotional. And we're all going to make it to the pinnacle in this environment. Now, until next time, Zip is out.